Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Thursday evening, the 27th of July, 2023, 6:53 or so p.m. Central Time. Interesting day. It was a day where the market saw power come out of the second quarter. The first look of the second quarter GDP blew away expectations. Then we saw durable goods. The consumers returned to buy big-ticket items. That hadn't been the case for a while. And it took the market by surprise. So all day long, in the morning, I should say, we were fighting. Is the Dow going to be positive, negative? Are you going to get 14 days in a row, aren't you? Does it really matter? Eventually, markets correct, okay? But that doesn't mean that they've topped out. And that's the way you have to approach this market. So by day's end, we finally got a correction in a number of markets. But there was a landscape effect. First, the dollar, super strong. It started off weak. It went up 130 points from the low. That's a big move. And it did it because traders started going like this, with me too, by the way. Wow, look at how strong the economy is. Unemployment claims, instead of going up 7,000, we're down 7,000. You dropped into continuing claims by a good number. By the way, your unemployment claims are the lowest they've been now. They're back to the February lows. So it's not just a few months. They're back to those lows. That's a sign of the strength. The GDP, boom. That's strong as can be. And seeing people are still buying and they feel good about everything, what can you say about it? Now, tomorrow, we get one of the Fed's favorite indicator readings, the PCE inflation number. That's what we want to see. Is that dropping for the Fed or not? And then, of course, we're going to get a whole host of numbers next week when we get the jobs report, and then you're going to get the CPI report. So it's a never-ending cycle. Christine Lagarde was out this morning talking about the euro, and they went up a quarter point. And you would think her and Chairman Powell were joined at the hip. And I don't mean that from a negative or a way that you don't put anything dirty on that. They're saying the same thing. We're data dependent. The market will tell us what we're going to do. Every meeting is a live meeting. And the data will be where it's at. And they, too, don't get a meeting until September. So they have plenty of time as well. And everybody's going to get a look at the economy to see just what is going on. When you look at the S&P for the week, you're flat. You're up 0.1%. You're flat. No other way to say it. When you look at the daily chart, there was damage. Now, this is called an outside day down. I have a course on outside days. You want to pay attention to that course. It's 9 chapters. It teaches you how to look at them and what the typical outcome is. So in this chart, you had been going up. So instead of this being a continuation pattern, it is a sign that the market has made a short-term top. Whether it turns into a longer-term one, time will tell. In order to say this is a trap for those that are thinking it's a short-term top, you have to take out today's high, right through here, and do it within, for me at least, the next 2 trading sessions. So by Monday, Friday and Monday. When I look at the chart action, higher high, lower low, nope, distribution there. But I still see a market well over the 18-day average. So I think the market, if it falls to that support and tries to fight the battle there. It just missed getting up to the Bollinger Band again. And we talked yesterday, if it was going to continue, would it make a run for that? Look at yesterday's video. We were saying that. Just missed it. Okay. Momentum-wise, something big is happening. So if we come here and we look at the momentum, let's remove Friday's, which is tonight. Where are you embedded? Well, you had a number at 79.44. You had both numbers over 80. You had both numbers over 80 on Tuesday and Monday. So day 1 of embedding, I'm just counting 2, 3. You had your 3 days. You attempted to lose the embedded reading today. And now the question is, will it lose it on Friday? That's, to me, is going to be the big action. I went the wrong way. Here it is. So far, the answer is yes. So it had an embedded reading. If it loses it, and you've taken my enhanced Bollinger Band course, you know that then the odds favor that before you get up over this high, you're going to make a run to the 18-day average. So for me, that's very important. When I come to the NASDAQ, that all happened back here, and you've made your run to the 18-day average. These markets are not bearish yet. They're not bullish. They've gone back to a neutral stance at this point, which they so deserve. The Dow, not yet. It still has both numbers over 80. So no, even with the outside day down, this rules the day, not the outside day when you have an embedded reading. Lose the reading, and then before you take out this high, which is an indication that the uptrend has gone into a pause at a minimum, maybe you then break back to the 18-day average, but it's from there. We'll see what happens. Going up 13 days higher, day after day in the cash market, is not a sign of weakness. And to get a correction from it, come on, nothing grows to the sky straight up. When you look at the Russell, you lost the embedded reading, and it happened with an outside day down. I fully expect we're going to challenge the 18-day average of closes immediately. When we come to the T-bond market, well, you're looking at how much strength, and people keep saying, well, you're not going to add yield to the 10-year or the 30. And today, everybody got rocked on that, and that's what you're doing right here. The trend is down. You're already oversold. Major support in between the Bollinger Band in black and this last break low right there. So I think that you'll find that you get down there and the buyers will show up in terms of covering short positions. In the 5-year note, still bearish. And what the market did is it has fought for over a week at the 18-day average, and it resolved itself today with an outside day down to say, we're back to bearish. The negative part is, who wants to sell an oversold market? I certainly wouldn't tell my client to do that. If it wants to continue down, then the lower band is the objective. You see that you had support there, and the resistance on rally should be the 18-day average. But if you take out on Friday or Monday the highs of today, Thursday, I think you laid a bear trap and you're all of a sudden up and you're losing yield, 1, 2, 3. In the dollar index, we had a bear market rally, bearish only in the sense that you were under this whole time, the 18-day average of closes. Today you have an outside day up, and you're over that. So until today's low is taken out, the market has reaffirmed its bullishness, saying it wants to go up and challenge, if it's going to be able to get momentum here, the 100-day average in green, but you're already overbought. Be very careful buying overbought conditions. They either embed or you get caught in them. How do you correct an overbought condition? Typically by breaking or embedding. It's one of the two. In the euro, same thing here, fighting that battle. So I would look at all these outside days and either say, they've ended trends or they're giving me a continuation pattern. But if they're an outside day down, keep a close eye on the high. In the next 2 sessions, if it's taken out, it's a warning sign you've laid a trap for the bear and this market's ready to pop. I'm looking for support right through here. And no, I don't see bullish or bearish position right now in the currencies. The British pound. I don't think you do anything in the pound until you get past the Bank of England next week when they make their move. Japanese yen, by the way, tomorrow will be impacted by the Bank of Japan announcing their monetary policy. And the word came out, and I write about it in tonight's written up date for my subscribers about what the trade thinks is going to happen. They think they're going to release that the bank is going to expand the bands they're allowing certain interest rates to go. Not changing their monetary policy completely, but this is the beginning. And it has major ramifications. The yen being as cheap as it is has been a carry currency, and that could unwind certain things. So be very careful with that. We'll see what they come up and do and how the market reacts tomorrow. This is right in front of you. Take a look at Bitcoin. It's fully embedded. I thought I had changed this to the August. I don't know why it didn't take. I know I did. Yeah, I'll catch it tomorrow. In Brent versus WTI oil, still coming down and still going up in price and fully embedded. This is what your embedded readings look like, and they are going still. The resistance is the Bollinger Band. Notice you don't go up there and just keep running. And I know so many traders tell me, and I get the letters from them, or they'll call me, Ira, explain that again. I go, no, you get up there, you're often buying a near-term peak. Wait for it to come back and let you in. And sometimes they'll say, well, but I'm going to be buying higher than I want. I said, I know, but you're asking the percentages of trading, and that's the reason. Lose the reading, then you want to come out. Well, you got the same thing here. So I think the pros are buying each of these little dips as you're going higher. There's a key moving average I use for that, and pumping out against the upper Bollinger Band until you lose the embedded reading. Gasoline, same thing. Did I not just say yesterday it was? Not today, yesterday. I had written a report and explaining why gasoline prices keep moving higher. I did that for my subscribers, and you're there. And I don't think this is over. Now, I'd be very cautious on natural gas. We've just had a major heat wave in the U.S. go through the center of the country, and you didn't rally at all. You had some of the major power grids come out and ask their operators to go full tilt so they don't get brownouts anywhere. That uses gas and other sources, coal, whatever they're burning to create the electricity, and you didn't move on it. That is not a bullish sign. That is a bearish sign, and that's how I look at it. So you put it together, you try to come up with a game plan, and that's where I try to come in, giving you education ideas and the outside day course. You get these patterns all the time. Outside days are one of the very typical patterns you get. I cover them. It's 9 chapters of a video. And then included in the course, you get my free morning, you get from me free for a limited period, access to my videos, both my ETF stock one and my futures. And we're looking for these, and I reinforce what you're seeing, and suddenly you go, oh, I see what he's talking about. 9 video chapters, each 15 minutes or so. You're going to knock it off on a Saturday afternoon, and you're going to say, wow, that's another way to look at it, okay? And that's what I try to do. I try to give you different ways to look at things. So how do you do this? You can call my staff. You can go to iraepstein.com under the word education, or you can move your cursor up to the top here. We'll have a link there. It'll take you right there. I'm Ira. You have a great day.